1, 2, 3, 4, 5, 6, 7 this stream time. So I welcome you guys here on our today's streaming session. I'm Stan. I will be your host today. So give me just a sec. I will set up everything to make sure everything works correctly. So yeah, I welcome you today. I'm Stan. I'm trading specialist at Exness. So and a trader since 2004. Today I will be presenting you some opportunities and ideas about today's markets. All right, we have chat here, guys. So for those of you who are new, I remind you that we have chat here on YouTube. So for those of you watching on YouTube, you can drop your comments and questions in chat. So I will be more than happy to answer your questions. MC Trading is in chat. Hello, DJ Isach. Whether I spell your name right or wrong, sorry. Let's go, yeah. All right, so today's week is a new week in the markets. Today is May 20th, 2025. So this week is relatively technical in terms of combination of different events and scheduled releases. So we don't have any big economic releases ahead. But nevertheless, let's go. Let's see what we might capture. All right, so just one quick tweaking, one final tweaking. All right, I will. Okay, one second. Display video capture, just one quick preparation, guys. All right, so yeah, now we're good to go. And we are going straight to charts, straight to the Exness terminal. I hope that you see my screen. And we have a request for gold and Bitcoin analysis right away. All right, before doing so, let's quickly go through narratives and fundamental influences this week, so whether we have any or not. By the way, I forgot to do this. That's a stream time, right? That's a stream time. That is our tradition. So we are starting the streaming session. And yeah, and also I remind you that this is not a financial advice or any investment advice of any kind, so do your own research before making any decision. So you are fully responsible, as well as every person which is pushing buy or sell button is responsible for anyone's decision. All right, so let's go quickly through the economic calendar. So today is Tuesday, 20th of May, and we got our RBA, so Australian interest rate decision. So it's already published. So the actual was 3.85%, so which is just as scheduled. No surprise here. All right, scrolling it down, we have inflation rate for Canada. Also, we don't have this number yet. It will be published slightly later in American session. And scrolling it down, we are going to Wednesday. Wednesday is the combination of different events, like, for example, inflation rate for the UK and core inflation rate, which is the UK CPI, important for those trading British pound versus other currencies. Also, we got some speeches of Fed members. For example, on Wednesday, we got Fed barking speech and ECB Lane speech. So politicians and central bankers, they will be having speeches on Wednesday. So also, as usual, we got crude oil stocks change on Wednesday, which is published by Energy Administration of the United States. For those trading crude oil, it's important. And yeah, so don't miss this event in case you're trading crude oil. Okay, so going to chat, guys. So Joyce is with us. Hello, Joyce, streaming from Nairobi, Kenya. That's good. So hello, Kenya. Yeah, Uganda, right? Felix, Uganda. That's fine. So we got a lot of guys from this region. So nice to see that. Nice to see that. Haven't been to Kenya, but hopefully one day I will. Okay. All right. Thursday, scrolling it down, we got some releases for Germany, so I4 business climate. So that's basically a sentiment indicator. So that's not a economic indicator of a kind. So that's not employment. That's not official. That's a sentiment indicator. What else we got? So we got on Friday, we got inflation rate for Japan, retail sales for the UK. Nothing really serious, I would say. Well, home sales for the US and speeches of Fed members. Well, speeches of Fed members might shape the price action a little bit, but that's not Jerome Powell, guys. That's not official. That's not the main guy who says good afternoon, who is Jerome Powell, as you know. And I don't think they will shape the markets to a substantial extent, so I don't think so. All right, so I would say this week markets will be traded technically, and probably we will see either continuation of current trends or maybe the development of kind of reversals or any similar price action, which I don't think we have any substantial drivers behind the price action. Let's quickly go through Bloomberg and see what's in the headlines. What's in the headlines today is negotiation, so phone call between Putin and Trump. That's geopolitical thing, but that doesn't really affect anything, I guess, except maybe DAX, which is the German index, maybe Euro to some extent, but that's not really influential because nobody really expects anything from these talks. What else we got? So going to markets. Let's go quickly to markets, read the headlines. US stock rally set to stall after 6-day run. Yeah, we got 6-day run for S&P 500 and NASDAQ. So that was the previous week when the market was easing the sentiment. So that's exactly what we are viewing here. So for example, going to US stock, going to NASDAQ, you exactly see what was happening. So market was accepting the area above 200-day moving average, and this is the action, right? So it's completely erased losses which were generated after the so-called Liberation Day. So Liberation Day, I guess that was the beginning of April. Here it is, by the way. So that's the moment when Donald Trump, the US president, had announced tariffs with the rest of the world. So that was the drop for NASDAQ. And of course, previous week, those losses were completely erased from the market, and market seems to getting back on fit. But at the same time, the main question is whether this move will continue or not. And last week, by the way, NASDAQ was a good buy, basically good buy opportunity, because usually from the historical studies, we know that once the asset crosses the 200-day moving average, which is the important benchmark, usually it holds for maybe a week or so above this level. But later on, I think we got some increased probability of the market testing this level back again, so retesting the 200-day moving average. I think that's the realistic scenario. All right. How is sentiment? Is the market expected to go up or down? Nothing is changing on the screen. Really? Oh, sorry. Give me 1 sec. Nothing is changing, right? That's the glitch of the... That's a glitch of the OBS software. All right. I hope that you see that now. So yeah, hopefully you got the... All right, so let's switch to another tab and see if you see the changes. Yeah, I hope that you see the changes. All right, so let's move on. As I've said, so I expect Nasdaq index maybe to rebound back to 200-day moving average. So I don't think that this rally might be really sustainable. Also, what we had in the beginning of the week, so we had downgrade for the US bonds from Moody's agency. Warren Buffett and Berkshire Hathaway was the 13% stakeholder, minor stakeholder of the Moody's agency. And basically once he left the company, so he resigned, what happened? So they got the the US rating down for one step. But that didn't affect the market whatsoever. So Nasdaq keeps pretty strong, keeps at a strong pace, climbing at a strong pace. DAX, for example, I think it looks much stronger than Nasdaq right now. So first of all, it's on the new peak. Secondly, so that's the European index, and we got this sell American narrative promoting in the market again. And you see that DAX is feeling substantially stronger. So if I would need to choose this time what to trade, for example, from the stock indices perspective, what I would do, I would probably trade DAX instead of Nasdaq. Though it's in the new peak, so I don't like jumping on the new peaks. But for example, if you see any pullback, any minor pullback, any small consolidation, something like that, so I think it would be possible to maybe join this rally and to build a short-term position in order to reach the upper band of the Bollinger on the daily chart. So I think that might be completely possible. So once it reaches the upper day of the Bollinger, so the market might be overbought a little bit, so that might be the time to exit the position. So DAX, right? DAX is our preference, might be for today. Why is that? Sell American narrative is not leaving the market anytime soon. The American dollar is declining, so it's being pushed down despite strong fundamentals. So let me just show you really quickly. So American dollar is being pushed down this week, even though we got pretty strong developments on the probabilities of interest rates. So you see that if we go to FedWatch tool of CME Group, if we scroll it down and let's try to understand what's gonna happen on July or June, go into historical tab, you see that those probabilities are climbing, meaning that yields of government bonds are also pretty high. That usually should support the US dollar, so that is not a bearish factor for the US dollar. However, the US dollar declines, so that's an unusual situation. Whenever you have a decline of the US dollar, despite the strong parameters of the bond market, so that is the indication of a negative sentiment. That is indication of the strong negative sentiment. Well, while that might not last for very long, but that's an indication of a negative sentiment. And given that, so volatility on other currency pairs should increase in our case. So with that, you see what's going on with Euro USD. We see what's going on with GBP USD. So they're climbing a little bit, but so they're fueled by the decline in US dollar. So that's an interesting situation, and we probably got some short situations for the US dollar this week. So let's quickly take a look also on the developments of other pairs. All right, so let's keep it in mind, guys, that American dollar reacts negatively despite the strong data. That's a piece of information that we incorporate in our decision-making process. All right, so let's maybe start with gold, as everybody trades gold. Everybody likes to trade gold. And let's start with that, actually. So gold, all right. Gold had tested the 20-day Bollinger, which is the 2 standard deviations from the 20-day moving average, not so long ago, so actually 4 days ago. It had tested this level, so it's retracing now. Today, I think, is the formative day. So it's Tuesday, May 19th. Why it's showing May 18th? It's not even a day, right? So we should ignore that. It's not even a day. All right. So we got the 4th day of the potential downside correction here. So today is the important day when the downside break should either develop into something more meaningful. So it should either test this level once again, like that maybe, and after that it will go higher, or it might continue the move today. Because if today's move will sustain, if it will not go down today, so maybe we'll get continuation tomorrow. But I think that actually, given the situation on gold, so we got pretty strong, I think, strong expectation that this uptrend might actually break to the downside. Why is that? Because we don't see any big conviction in the market. So 4 days of the correction, 4 days up, market is not continuing to go up. So American dollar is under pressure, of course, which currently supports gold to some extent, but I don't see any confidence here in the upside move. So I would advocate for another entry from the downside, maybe something like that. I think it would be substantially more logical to observe the continuation of the downside swing, which we are located within. So here is the swing. So here is the downside move. It's developing, even though the market has corrected, but the downside swing is developing. Let me just quickly outline this situation for you. All right, so give me the path. All right, so we are in the downside swing. That's a correctional point potentially. So today is the aha moment. If the market won't hold, if it will show us that it cannot break to the upside, but it's already almost the American session, so I think it's already showing us that it's unable to break through the ceiling. So now exactly it's trying to break exactly to the upside. We don't see this attempt being successful. So if we will have the bullish trap, so for example the attempt of an upside breakout, so if you see that this attempt is unsuccessful, for example the upside breakout, and if it fails, I think it might indicate the opportunity to go to the downside, maybe to reach the 3,125 or something like that. So the level, at least the level at the bottom of the Bollinger Bands, so maybe not exactly like I've drawn it here, maybe somewhere here. And after that, I think that we might get the continuation to the upside, something like that. So guys, we are observing the price action as it develops, so let's not be trapped in the price action. Price is just the advertising mechanism. It might show us some development, but in case we got 3 or 4 days with no follow through, with no continuation, that might be the potential sign of weakness. Well, gold at the same time, as you know, gold now is not super strong. So because currently there was a sell-off for safe havens, which had started some 2 weeks ago. We've been discussing that on a streaming session. So that was happening 2 weeks ago. So the downside move had started. Maybe this time we might have the correction, another correction to the downside. I don't know that, but according to what I see right now, so I think that might be a pretty decent opportunity to catch some small swing to the downside, maybe a couple of days down, and only after that we might try to build the upside position, so the bullish position. At the same time, today's action can easily turn into the bullish day, right? Something like that. So that's another scenario, that's alternative scenario, and what I'm trying to tell you is that you should probably observe how fast and how strong the breakout might be. For example, if you will get the 1 bar to the upside, holding, not falling, something like that, so probably you should be very careful about shorting gold. Maybe it will sustain the action. And it will be too late to enter, by the way. But that might be the situation of the scenario, or when gold actually turns back to the middle of the range, something like that. So 2 scenarios. That's an interesting situation, guys. So we either get the upside breakout or we get the bullish trap. I think that we will get the bullish trap. So according to what I see, according to the price action, I don't see any big volumes here. I don't see any big conviction. And so I would say that probably I will be monitoring for the failed breakout here. So failed breakout will lead to probably another round of selling. So that's for gold. What's the rationale behind this price action? So despite the local weakness of the American dollar, conditions on the market are pretty tight. So bond yields are pretty high, and you know that gold competes with bond yields. Whenever bond yields are high, so gold usually tends to, let me show you, it tends to stay under pressure. And that's exactly what we've got here. 4.92% for American bond yields. You see that they're climbing and climbing and climbing higher. Gold usually has a negative correlation with the bond yields, well, particularly with TIPS, which is inflation-adjusted bond yields, but But anyway, so they are also moving up. So let me show you once again 30-year tips, for example. 30-year tips yields. Gold has a negative correlation, not just with the US dollar itself, but with the 30-year tips. And we got them on the peak. We got them on the peak, and yes, that's the negative condition of the gold. That's why gold cannot grow right now, because gold is competing with the bond market in terms of yields, because gold is perceived as a safe haven, and also it's perceived as a alternative investment asset, right? So let's say so. On the historical retrospective, if you just put here 30-year tips and gold, you will see the negative correlation between these two lines. Whenever tips are going up, usually that's a bearish market on gold. Whenever tips are moving down, that's a bullish market for gold. So now we have tips going up, so that pressures gold, and gold cannot grow here. All right, so reading chat, guys. So hello from Nigeria. Hello, Nigeria. What does this mean? Okay, well, I don't know whatever you mean. So please ask your question once again, so for me to understand what you're asking about. What's your take on GU? GU, do you mean, what's GU? All right, so guys, we have chat here. I will read this chat from time to time and read your questions. So that's exactly what streaming session is about. Also, would you mind to maybe invite your friends next time to this streaming session? Don't leave it just for yourself. So because I believe that sharing knowledge is a big thing in the community, in the industry. So whenever you share the knowledge, so that's a big thing. If you help someone to actually learn the markets, so that's the sharing the knowledge. That makes a lot of sense. It makes a lot of sense. All right, so for gold, guys, well, let's see how it moves. So let's make a screenshot, right? Let's make a screenshot. That's my take. So I don't have a crystal ball. So guys, also please remember that I'm not a prophet. I don't have a crystal ball, but according to what I see from the market conditions, so I expect this kind of development. And let's make a screenshot and see on the next streaming session how exactly the situation will unfold. All right. Now let's move to GBP USD, because GBP USD will have a bunch of publications this week, including inflation, for example, which is going to be published on Wednesday, I guess, inflation. And all right, so what do we see here? So I don't see any big conviction here, to be honest. So it's reaching the upper band of the Bollinger Bands, the 2 standard deviations from the mean. What do I see here? We did have a strong trend before end of April. Now the market regime had changed, and the market had started to actually fluctuate around 20-day moving average, which is the sign of potential weakness. That does not mean that it's necessarily should be weak, but that's a trading range. That's obviously a trading range. And the good question is whether the market will get out of this trading range and when exactly it will get out. So the trading range is pretty tight, meaning that the breakout might be pretty aggressive, but the good question is when exactly the breakout will happen. So according to what we see in the markets, we can assume that the breakout will be to the upside, right? Because the American dollar is under pressure, and that might look like that actually. But the million-dollar question is the timing, actually, right? The timing, and when the timing will come. So the best guess that you can make in this situation is to analyze the volatility. So volatility is the average to range indicator, which is built with a parameter of, let's say, 14, or let's maybe take 20. All right, 20 is also good. Usually breakouts of the range happen when volatility drops to the new low. So what I'm saying is that, for example, let's take the previous examples, like the one here. The volatility had reached the new bottom, then the breakout had happened and it started to increase. The same thing here. The volatility was not so low, by the way. But for example, when the breakout happened here in July 2024, exactly we got the new bottom on the volatility. So I guess that, so if you monitor a volatility range, So you can wait it to drop for the new low. So that might be the indication that the breakout for GBP USD might actually be close, pretty close. I would advocate that it will be to the upside because British pound is pretty strong. When exactly, we don't know. The trade location is not very good. It's slightly above the support, which is 20-day moving average, and slightly below the border of the Bollinger Bands. So if you want to trade GBP USD, so that's a good question. So you can trade within a day if you like, but if you want to really build a swing trading position, so you got something like, I don't know, you need to wait maybe until it tests the support back again, something like that, and it starts to move higher. So I would be waiting for this market maybe to come back and coming closer to the border of the range. So that's the anticipatory setup. When it comes closer, you expect it to break, something like that, because we already got pretty big number of tests of this resistance area. So if it comes closer back again, for example, for the 5th time, so the probability of the breakout would actually be increased. Until then, we are sitting on the sidelines because that's a trading range, so that's a noise, market going back and forth. So that's very difficult to catch anything here in this market inside of the range. Well, it's still, if you want to trade, what you can do here. For example, if you want to day trade, well, you can spot some false breakouts to both directions, but it will be incredibly difficult, and I think that potential is pretty small. For example, it breaks down, it comes back, it breaks down again, it comes back, it breaks higher, comes back, something like that. So this kind of action. So I don't know if you want to guys trade this. So honestly, I don't think that's a big opportunity because noise, the amount of noise is pretty high, predictability is pretty low. And you can easily end up with generating a lot of losses in such market condition. That's called the coil, or the small trading range, or the tight trading range. Usually I avoid such type of markets. All right. So yeah, so that's GBP USD. Well, what about Euro USD? Euro USD is pretty much the same, by the way. For Euro USD, we got some pullback from the downside, which we've been talking about maybe not so long ago in previous streaming sessions. That maybe looks similar to gold. And also, so you may notice that here we got already 1, 2, 3, 4, 5, 6 days up. So the 6 days of worth of correction. It had reached the 20-day Bollinger Bands. I don't think also that it will this week that it might continue its movement to the upside. Maybe we will get the retest, pretty same direction as with gold, something like that. It will be completely logical. But for gold, I think it's more interesting situation because the situation is kind of fresh. It's already 4th day, so if the break will happen on gold, it might be more aggressive to the downside. Euro USD is a little bit more sustainable, so it goes already 6 days in the upside direction. It's a little bit more sustainable, and actually it might rotate around this level for a little while, something like that. So the odds or the probabilities of the rotation, they increase a little bit, given that this correction is a little bit longer. For gold, the correction is smaller, so that's why if it doesn't hold the action, so I think that the probabilities of gold testing the lower level is higher than Euro USD testing the lower level. However, they usually correlate, meaning that if gold goes down, so that means the American dollar going up, so retracing, that means the Euro USD retracing too. Something like that, I think. All right, so Euro USD, I think that's a rotation, so I don't see any substantial opportunity. That might be the rotation, and the rotation means that, so how you can trade in this situation, maybe if it breaks to the downside, you wait until some small minor pullback, again, some triangle or whatever it is, so it might be building in this market. For day traders, that might be some opportunity. So, for example, if the market drops here below the Bollinger Bands, so you spot the reversal pattern, the smaller time frame, you take the candlestick formation. For example, market goes higher, you close the position once it breaks, you open the opposite position once it forms the opposite pattern, something like that. You can capture some, you know, action both to the upside and to the downside within a day. However, that's a noise, guys. That's a noisy action, so predictability is pretty low. So you never know exactly where the trading range will hold. Maybe it will just, you know, establish higher, or maybe it will be established a little bit lower, something like that. You never know that. You never know the midpoint, in other words, the midpoint or where exactly the trading range should be established. So that's incredibly difficult to predict. All right. All right, moving on. Moving on. All right, so let's move on to Bitcoin. So we got request for this instrument some time ago. All right, we got people from Dhaka, Bangladesh. Hello. Reading chat a little bit. All right, Bitcoin. So Bitcoin is holding its levels, so 105. Well, the price action for Bitcoin was relatively robust, was relatively, I would say, strong. And, well, it shows some resilience, but at the same time, we don't see the excessive action. So the open interest is, of course, growing here. So let me show you a couple of tips and figures from the on-chain analysis perspective. So what do we see here? The so-called MVRV indicator. So that's the first thing. Which we see here. So let me put it here. MVRV ratio. So for Bitcoin, the MVRV ratio is held above 2, so 227. So that shows a resilience. That's pretty optimistic market. And that means that this market is actually already gaining some good ground. So optimism is pretty high. But I think the more interesting situation is visible on the ETH, because not so long ago, well, give me just a sec, I will get in the platform. And I think the more interesting situation is building on ETH, because on ETH, so MVRV ratio had surpassed the 1 level, so now it's 123. It had surpassed the 1 level not so long ago, basically last week. So I think for ETH, the breakout potential, the upside potential is a little bit stronger, because it had just turned from the negative zone to the positive zone. In other words, the MVRV indicator lower than 1 means that the majority of supply is in loss. If it's above 1, that means the supply gets in profit. So that gives some optimism back to the market. They start adding to their positions. They start buying more. And also we got ETH for Exness, so we can absolutely trade it here as well as Bitcoin. So the upside break was more aggressive, more, furious than for Bitcoin. So this situation might end up with another breakout. So I would be carefully monitoring for the situation, okay? So maybe something like that. So I'm expecting another wave, maybe reaching 3,000. So that will be absolutely possible. 3,000 is a level slightly above the 20-day moving average, 20-day Bollinger, sorry. So the good question, of course, the million-dollar question is when exactly the market will get out of this range again. But I think that's pretty straightforward. So for that purpose, you can just build a simple trend line here, which might work like that. So that's a very simple, pretty easy continuation pattern, which is known as a... What is that? That's a flag, right? Well, it's not a flag, actually. It's a widening formation. That's called a widening formation. So now it's consolidating right within, but in case it, comes closer to this border of the range, so we might expect the breakout. It will be completely logical, but breakouts are pretty strong and pretty fast. So you need to be near a computer when that happens, because you won't have much time to realize this opportunity. So these opportunities are usually quite fast and quite furious. But that would be my course of action for ETH. because I believe that given the strength for Bitcoin, given the overall market sentiment improvement, that might be potentially interesting. All right, so that's the potential developments. We never know what exactly will happen, but I think that this is the no-brainer trade, given the improving on-chain analysis parameters of the instrument, given the strong trend before, and given the overall optimistic agenda on the crypto. All right. So that's ETH. So would Bitcoin be a good buy? Bitcoin is standing at the peak, exactly at the peak in comparison to ETH. So it's testing the previous all-time highs closer. Well, it might also, spike to the upside. But for ETH, I think that we might have greater potential than for Bitcoin. All right, going on. So Australian dollar, right? So we have a request on Australian dollar. Let's go and see if we will have anything substantial in Australian dollar. Again, a small coil, a small consolidation, right? Small consolidation. No development to either direction. So I don't know why this instrument should be interesting for us, because there is no development. However, so we also know that when volatility is going down on the instrument, so what we can see here, we can see the further development for the instrument. So in other words, when volatility gets lower, the expansion of volatility might happen in the near future. So currently volatility is moving down, so this instrument is losing volatility. You see average range moving down and down and down, so it's losing volatility within this range. So the good question is whether we can spot here any opportunity or not. So given the overall weakness of the American dollar, we might expect the breakout to the upside, but we don't really know in which direction it will break. It might be false breakout to the upside, then breakout to the downside, something like that. Usually for currency pairs it works like that. So you see volatility is moving down, then we might expect a bigger move in the near future. Not exactly today, because today we don't see anything yet. But whenever it starts to shake, volatility may expand. So here are borders of the trading range, so we might monitor for the potential continuation below or above these borders. For example, if it goes higher, so we might expect a shakeout, so we might position ourselves in this direction. If it's unsuccessful, we gotta be very tight in protecting our positions. For example, if it goes lower, again, the same situation, we might continue going to the downside. I don't think it will break to the upside substantially, because that means the weakening of the American dollar. I don't think the American dollar has any more capacity to weaken anymore, because it's already oversold according to different metrics. And yields are high of government bonds of the United States. They're pretty high. I don't believe that it will go substantially lower. So I think that it might actually go maybe lower, but let's see, we don't know that yet really. So because we don't know that yet, maybe that will be another round of selling for the American dollar. If it will happen, volatility on other currency pairs will increase substantially. On Australian dollar, on Canadian dollar, volatility may increase actually, because that means instability for the markets. The volatility of FX options will actually be boosted, will go up in this case, and that's what we can expect. So currently no action whatsoever on Australian dollar, so we're just standing in the coil. So we also should sit on the sidelines and wait until anything will happen here. USD JPY, all right, USD JPY, yen versus, American dollar versus yen. So that's an interesting development, because American dollar is kind of weakening. Yen is also pretty strong. So if you take a look at what's going on the yields of Japanese bonds, they are climbing to the new peak. And already I think they're giving us something like 296. That's already more than 3. So we got 3% of yields for 30-year bonds for Japan. So that's really unprecedented situation. So we haven't got this yield for the long time. I guess since 2001. At the same time, we also know that strength of the yen is not supported by the central bank of Japan. So that's a pretty dangerous situation. So they should prevent money flowing into the yen, and usually they make interventions. Currently, I think that the yen is not expanding, strengthening substantially. So it might strengthen to some extent, but it's not strengthening substantially. But currently, the conditions for the yen are pretty tight. They are pretty tight, at least in the short term, given that today we've reached the 3% of the bond yield, so that's pretty high. So I don't see yen weakening today, at least today. So maybe I think that this trend might actually continue moving to the downside, but that's questionable for how long that should be. Because usually the market doesn't like, or Japanese central bank doesn't like the situations of strengthening yen, so they usually protect it, they usually make interventions. We don't have any intervention calendar, they don't tell us about when exactly they will make the intervention. But, I think that this tightness of the bond market will attract more money flowing back to the yen, and that might make the Japanese bank to step in the situation and protect it. So, and I don't think it will go substantially lower than this level. Well, 142.30, maybe something like that. Maybe the zone. It's rather the zone or the area rather than a level. So I will expecting it lower at this level, monitoring for potential pullbacks from this level and building long positions. Because I don't believe that in the long term yen will strengthen. Given the strength of the American dollar, I think it's gotta actually weaken. And that might be the potentially interesting situation. ATR volatility is declining here, so it's not yet super low, but in case it lowers again, so that might precede any bigger moves, something like that maybe. So guys, I'm not watching longs today. I will be watching longs for the lower level. So for example, for short-term positions for today, for tomorrow, that might be short, I think, especially if you are patient enough to wait until the price will reach the potentially pivot point, so the Bollinger Bands indicator, something like that, or maybe if it will show us the false breakout to the upside, especially. So if that's gonna happen, so I think that would be a strong short for dollar yen, at least for today. Not for the long. I think for 1 or 2 days maximum, something like that, 1 or 2 days maximum. So if we see such a development, so that might be the indication of a strong short setup. Again, so if the action is strong, if it breaks to the upside substantially with a big candlestick, with a big body, so that's a cancellation of this scenario. Until then, I think if there is not substantial breakout, we can think of selling yen, selling USD JPY against this price action, against the upside price action, if any of the price action will ever happen. Again, so to sum it up about the Japanese yen. So about the Japanese yen, we got really strong dynamics of the bond market. So the sell-off on bonds is really substantial. So the yields are increasing 3%, 3.1%. That's unprecedented level. We haven't been there, not even for the long time. I think that's the first time in history when Japanese bonds are attracting so much capital back when they're offering such a huge yield. So that prevents yen from falling. But in the long term, yen cannot strengthen very hardly because Japanese central bank may impose an intervention because they don't like it to strengthen substantially. So, all right, that's about the yen. All right, so let's watch other instruments which might we potentially have. So we got crude oil, for example. Let's analyze crude oil, which is US oil. That's pretty consolidated, so that nothing really happens here. It loses volatility, you see? It loses volatility. It still is positioning in the window, in the seasonal window of growth, which was the good opportunity was since the beginning of May, so it's still positioned in the upside move, fueled by the seasonal window of opportunity, so it's still far from the upper border of the range. At the same time, so it doesn't show any meaningful action. So this type of activity yet is still, so we still got an uptrend here. This uptrend had retested the 20-day moving average. Now we got the third day of the continuation, because this is not a day, it's 18th May of 18th, so that's Sunday. That's the third day of the continuation. So if it holds, maybe tomorrow we might, if it doesn't go down tomorrow, that might be potential opportunity to reach the peak of the Bollinger, something like that. I think the window of opportunity for crude oil is opening to the upside. Well, I don't think that it will go substantially higher than 65 or anything like that in the current market cycle, because 62 is considered as a fair price. How do we know that? If we go to the Energy Administration of the United States website, which is eia.gov, so let's go to STEO forecast, which is the short-term energy outlook. All right, so we see that actually the expectations of crude oil going down is pretty already priced in, but the overall expected price level for 2025 is below 60 according to the supply and demand. So the production in Saudi Arabia is increasing. OPEC Plus is driving prices down a little bit. So there are no really substantial changes, substantial shifts in the demand from China. And for example, if we Google US crude oil stocks change, US oil stockpiles, crude oil stocks change here. All right, so going to trading economics, we will see that actually they are increasing a little bit. So the stocks in storage are increasing, so meaning that's a bullish factor. That's a bullish factor that actually drives the market down a little bit on the supply standpoint. The supply is increasing. So that means that's a bearish factor for crude oil. Another bearish factor is increased production with the OPEC Plus. So, but the price action, of course, is temporarily bullish. So I think reaching 65 or 66,000 would be probably the peak. After which it might gravitate back to the mean level of 62. 62 is the average price to do business here. 62.60, something like that. So yeah, if it breaks out to the upside, I may think about the short position here, because it would be very logical. That's the top of the range. So if it doesn't break through the top of the range, that might be potentially interesting. But for the upcoming days, maybe for tomorrow, day after tomorrow, still I think we have the upside window of opportunity for the day trade, for the market going higher, because we are still in the uptrend. And the upside swing is developing right now. So for crude oil, the dominant scenario would be like that. So if we take a look, for example, for seasonal window of opportunity, so that's seasonx.com website, which usually is, well, you can, I don't know, if you like, you can make a trial here. Oh, okay, my trial is expired, whatever. All right, but anyways, this crude oil has a seasonal window of opportunity of the market going higher. All right, so let's watch some other opportunities more. For example, DAX index, which is DE30, is unconventional situation, so nobody really trades it. But I think it's relatively interesting, because usually stock indices are pretty aggressive, they are pretty directional, so they have less noise than the majority of currency pairs, and if they are moving up, if they are on the move, so you might expect to get some interesting situations out of those indices. So I think that you can absolutely capture some pullback from the bottom of the range it might be pretty tidy without any substantial noise, something like that on DAX. So in case it pulls back lower, I will be even entering the position with a short stop probably, because it's actually driven higher following the narrative sell America, because Nasdaq, S&Ps are also on the verge of growth, so they are growing, so market sentiment is improving, but I think the more capital will flow into the DAX because it's quoted in euro actually. Normally the German stocks are quoted in euro, so that has a premium, the currency premium calculated in euro. So it's quoted in the US dollars right now, but they are going up because American dollar is declining. So and they are adding some premiums here, which is benefiting from the weakness of the American dollar, and that's why I think DAX might be more interesting situation rather than Nasdaq, for example, So that might be the situation which we might be waiting for. Exactly, by the way, so that's exactly what happened, I don't know, yesterday or the day before yesterday. So you see that the gap down, that's the opportunity to jump in the upside move. Again, retest and a small retest back again, a small retest back again. So we have plenty of opportunities to join this rally until it reaches 24,500, for example. All right, now, guys, I will switch to reading chart. To reading your comments in chat. So please post your questions. Let's read the chat. Okay, so GBP USD. Well, we've already analyzed this instrument. All right, we got questions. Is the market expected to go up or down? That depends on which market are you referring to. Stock market, I think, has if we're referring to the stock market, as I've said, so I think we're in an upside swing for DAX. Nasdaq is questionable, so it might also go up, or S&P 500, but I think it's more fragile because it has the instability imposed by the American dollar right now. All right, what else do we have? All right, so no more questions. So let's we have a couple of more minutes to continue analyzing the market. All right, what I think else interesting is going on in the market. So we got, for example, natural gas. Let's see if we have any interesting situations for natural gas right now. So it was moving down. It was pushed down by I think seasonal tendency here. It's now located right below the 200-day moving average. And let's go again to the United States Administration of Energy Products and see what will happen with the natural gas. The average price, according to the supply and demand standpoint for the 2025, is calculated at a level of 4 plus, or 4, between 4 and 5 for 10,000 British metric points. Okay, so that's a temporarily bullish expectation, even though we got the decline here. So I think that the trade location for natural gas might be potentially interesting. So I know that's exotic instrument. Not all people are trading this, and I see why, because it's pretty volatile. It's pretty noisy. It's pretty noisy. But in case we might have the good closing day for today, the recovery situation might be pretty interesting as well. So, for example, if you are eager to build a swing trade for several days, if you are okay with withstanding this volatility, might work like that. So it's pretty unstable. So it might, go like that. But according to the supply and demand standpoint, this instrument is pretty readable, meaning that it's not really that noisy on the daily chart. So I think, for example, if you trade natural gas, it's better if you stick to the daily charts. So that's the way you avoid most of the noise. What else do we have? So, by the way, let's watch several instruments like, for example, stocks. We got earnings reports for several of them, but currently, for example, Tesla had made a substantial comeback, as well as Nvidia. So it's standing on the peak. By the way, the entire Nasdaq index was fueled by the rise of Nvidia. In a market like this, however, so usually investment banks represent more opportunities because they are more aggressive. They usually represent the greater opportunities. For example, JP Morgan, but JP Morgan also stands at the peak, exactly at the peak, so which might not be necessarily the good position here. So let's watch Hang Seng index, because we've seen that, for example, DAX is growing, the US 500 is growing. What about Hang Seng? Hang Seng is also feeling, I think, pretty well. So it's standing right below the upper band of the Bollinger Bands, inside of the coil, inside of the trading range. And speaking of volatility of this instrument, volatility is going down, which is a good sign. So sometimes it may precede the bigger moves, and also reaches the new bottom. So if you see volatility is reaching the new bottom today, basically. So I think that Hang Seng or Chinese stocks might be potentially interesting in terms of building potential momentum trades here. Well, I personally, of course, don't like jumping on the peaks, but in case we will have any consolidation here, it's at least small breakout, small consolidation, we might see the upside direction breakout, something like that. I think it will be pretty slow. I don't know if it will be slow or fast. We don't know that yet. But that might be expected. So higher above this level at 23,600 something, we will have the resistance area already underway. So that will be a good question whether this resistance area will be surpassed or not. But at least one or two upside bars will be absolutely possible here. And what is good about stock indices, what I like about stock indices, is that they're pretty smooth. They generate relatively small amount of noise. If they break, you can actually position yourself with a tiny stop loss, with pretty small, with 5-minute chart, and you can get the asymmetrical trading opportunity on the trending day. Just take a look at how this works exactly. Go into the 5-minute chart. You see that those opportunities are pretty tidy. Just like that. You see those bars are very small. Very small. So whenever it reaches the bottom, so it starts to retrace, the bars are really small, so you can actually place the pretty small stop loss and get this kind of move, which looks as a small, but in fact you can get, this substantial amount of pips, let's say, in your direction in comparison to your stop loss. So that's why I like stock indices in the first place. When they're trending, they represent a lot of opportunities, actually. All right, guys, I think that for today, that's all that we have on board, that we have on a watch list. Let's sum it up a little bit. So today, American dollar is driving down a little bit, so the sentiment is weak. However, fundamentals are pretty strong. So yields of government bonds of the United States, of treasury bonds, are pretty high, 4.9, above 4.9. Probabilities of interest rates are pretty high too, so they are not dovish. I would say they are rather hawkish. So I don't believe in the substantial weakness or substantial decline for the American dollar, but at least for a couple of days, for 3 days, in advance, maybe American dollar will get under pressure. Gold is testing the important resistance area. In case it fails, we might see it plummeting down pretty quickly, retesting the lower levels. So that would be my plan for today. But of course, I need some kind of confirmation. So as for currency pairs like GBP USD, Australian dollar, they are being locked in a consolidation, meaning that we need some confirmation. We don't know yet in which direction they will break. So at least I don't think that's a situation for today necessarily. So we might observe the action for a couple of more days, maybe 3 to 5 days, to track the potential development of these situations. Alright guys, so I think that we are all to do for today. Let's meet next time, next Tuesday, same time, the streaming session here at Exness channel. Don't forget to put us a like, to subscribe, and to invite your friends, fellow traders next time when you will have a streaming session. So we look forward to have more of you guys here on our stream. Thank you very much. That was Stan, Senior Trading Specialist from Exness. And see you next Tuesday.